Let's take a look at the macro picture, how it's all driving markets at the moment, particularly in the wake of the Fed decision. Peter McGuire joining us from XM. Pete, a very good, great to catch up with you, in fact, on a Friday morning. We start the week with you, we're ending the week with you. What are your observations of the week thus far, given, there's a lot to consider macro-wise, isn't there?
Absolutely, Andrew. Good morning and happy Friday. I'll tell you what, it's been a week to really, I think, unpack and waiting for the Fed announcement, what's happening as far as commodities, looking as currencies, Japanese yen intervention, what's going on in the sense of market sentiment, equities. Yeah, it's been really dynamic, and that's offered, I think, a marvellous opportunity for traders. And I hope that not many got squeezed as far as Japanese bank intervention and what happened to the yen, of course.
Well, let's just pick up on, we'll start in the States, in fact, off the back of the Fed decision. What did you make of that? Because the market's essentially perceiving it as less hawkish than anticipated. How did that reaction play out in markets, do you think?
Well, first off, if I look at the 2-year, and that's a good barometer, we had our highest point for the year. I think it was around Tuesday at 5.04%. It's given up about 17 basis points since then. It's sitting at about 4.87. So that's from the rate perspective. If we're looking at dollar, well, as far as US dollar index, it's really come under some pressure, and it was sold off fairly hard at 105.34. We had a high during the week or earlier in the week at about 106.50 for that dollar index. So there's the point. Interest rates came off, dollar came off, and then you saw a big move as far as what happened with certainly currencies and with and commodities, and then you look at stock indexes. It was fairly, I think, plenty of opportunity, and it's been a good week to trade.
So a bit of a different story, perhaps in Australia. Well, in fact, before we get there, what do we see with the US dollar? And then we can talk about the Aussie and obviously macro moves here locally. So the dollar has weakened, the US dollar that is. Where do you see it going from here?
Well, I think it's going to see probably a little bit. It'll touch maybe 105. You might see a bounce from there. It was certainly overbought, Andrew. It was very, very hot at that 106.50 level for the US dollar index. As far as we're concerned on the chart there with the Aussie, we're at 65.73. It's choppy. You might see it gain a little bit further to the upside. I wouldn't be surprised. US dollar comes off. Aussie ticks up a little bit further. So there's a possibility there. The next part, as far as where the Aussie plays, well, interest rate decisions and RBA meeting next week. So there's plenty of news, views and excitement for the month ahead of May.
All right, so to Australia then, we can see obviously the Aussie there with the US. There is increasing speculation, certainly, that's sort of been priced into markets at the moment. In fact, rate cuts pretty much priced out for the year now. With the possibility of a hike. How are you seeing it?
Well, that's right. You've got very sticky inflation. You've got CPI 3.5% year on year in March. You've got wage growth sitting at 4.2% year on year to the fourth quarter last year, of course. So there's the point. We've got, I think, a different viewpoint with the governor. She's far more, you could probably use the word aggressive in taming inflation, Andrew. So every possibility you could see a rate hike. There's about a 30%, 40% probability over the next few months. I won't be surprised. And we've just got to listen to the views and what the commentary comes out as far as next Tuesday.
Do you think there'll be a change in commentary next week, or perhaps they're going to wait a little longer, get a little more data, and then perhaps alter their view?
Well, I think it's fluid. I feel as though that it'll be a soft introduction. And I think later in the month, as more details drop as far as retail sales and other key inputs, then it'll become possibly more aggressive come into June and July. So, that's the story. And we've just got to see, of course, what happens with Fed policy, what happens with the Eurozone and Bank of Japan and of course, Bank of England. So, there's plenty of moving parts to this whole equation, Andrew.
Pete, you mentioned the Bank of Japan seems to be pretty active behind the scenes at the moment as far as the yen is concerned, given the price movements we've seen for the currency this week. Monday was a holiday in Japan, but that didn't appear to hold them back as to intervening. Did they do it again, though? What have you seen with that movement?
Well, I would say yes, but they're not putting their hand up, Andrew, so they're not admitting. So that's the story, but it's, we're sitting at the moment that 153 sort of handle and nearly to the point of high 152s. So that's a big move down from 160. 160.5. So yeah, it's been a dramatic week for yen. I'd say that's intervention, and we've just got to see again how that plays out over the next couple of trading sessions. But it's been dynamic this week, and there's plenty of traders that are enjoying it. Just be very mindful that the markets are incredibly volatile.
But is it going to take more than intervention from the authorities there to support the currency?
Well, I would say so. I mean, I'm looking as far as policy, what happens with, interest rates and so on. But they've got a very, very strong equity market, Andrew. It's been, you can't take your eyes off the Nikkei 225. It's been incredible over the last 12 or so months. So big gains, 30% plus to the upside. The Topix is on fire, nearly 40%. So, yeah, they're not short. They're not small little moves. They're monstrous moves for equity markets. And I'm just, be interesting again, see how this unpacks over the next couple of months with currency. What happens with interest rate policy, and where does equity markets play?